You're welcome to the Forex Trading and Lifestyle Entrepreneurship channel. Do take a minute to pause this video and read this disclaimer.
Hi there, it's Victor here, and in today's video I will be taking you on a tutorial on leverage, understanding leverage. Okay, in the last video we talked about margin. I tried to do margin and leverage together in that video, but the video became quite long and I decided to stop at margin. Okay, so margin and leverage work hand in hand. So today I will be talking more about leverage and help you understand how leverage works with margin. Okay, we established basically in my own simple definition that margin is the worth or the value of what you are buying in the currency you have in your account balance. Okay, and then so leverage, let's look at the formula for margin. There's a formula for margin here. Margin is simply notional value divided by leverage. Okay, but before we do this, let's do the leverage before we come back to that formula. All right, so if you're using a leverage of 1 to 100, okay, but before I go there, let's establish this. First of all, I said euro dollar 112842. In the last video, if you missed the last video, you're not going to get this part, so you need to watch the last video. If you're buying euro dollar, EUR USD, one standard lot 1.0 lot, which is equals to 100,000 units, you need a margin of 112842 USD. So margin there simply means for me to buy 100,000 euro, I need $112,842. That is the value of 100,000 euros, and that is what I need to buy it. Okay, but this is what you require. If this was what was required for us to start trading forex or a standard lot in forex business, most people would not be able to start up a forex business. What was the solution to that problem? Leverage. Okay, so leverage simply is simply what I described in the drug store, in the drug business, whereby a distributor collects drugs worth of 3 million naira and pays only 1 million naira, okay, as the margin deposit. Okay, he goes and sells the 3 million naira drugs and makes his profit. So let's say he makes 1.5 million on the 3 million. He now has 4.5 million. Okay, out of that 4.5 million naira, he now returns the remaining $2 million he's owing the drug company. Okay, so he has made profit with the other people's money. Basically, he has made profit using the drug company's money. And that is a very, very simple definition of leverage, whereby you have just 1 million naira, but because you are a very good customer and a very faithful and loyal customer, your partners, example the drug company, gives you good worth of 10 million. Okay, the remaining 9 million belongs to the drug company, but they are allowing you to use it for your business, and then when you sell the goods, you return the remaining 9 million to them. And so that helps you as a dealer, as a distributor, make more profit. Okay, you have 1 million naira as your working capital or your initial capital, but you are selling goods worth of 10 million. Okay, so you are using 1 million naira to control 10 million naira worth of goods. That is a very simple definition of leverage, and that is what is obtainable in the forex market. Okay, so your forex brokers provide us with leverage. Okay, brokers provide us with leverage. Okay, and so the broker says, so this is the broker, and you want to buy 100,000 euros. Okay, in other words, euro dollar, EUR USD 1.0 lots. Okay, the broker says, instead of you to bring $112,842, which is huge for a small dealer, the broker says, you know what, I will give you a leverage of 100. I will give you a leverage of 1 to 100. Okay, I will give you a leverage of 1 to 100. So let's put it well. 112,842 is the margin required. Margin required. So your broker, this time we are using FXTM, says I will give you a leverage of 1 to 100, meaning instead of you to provide this amount, divide it by 100. So if you use a leverage of 1 to 100, what you are going to require as your margin is only 112. Let's see, 1, 2, 3. 1, 2, 3. Let's see. 112,842.0. Okay, yes. So 1128.42 USD. So the broker says, instead of you to provide this $112,842, I will give you a leverage of 1 to 100, meaning I will cut down your margin requirement by 100. And so with 1128.42 USD, you can now buy 1.0 lots, which is equal to 100,000 euros. Okay, now you will understand why. So let's look at the MetaTrader. Now you understand why we have this figure here, 1128.42. Can you see exactly the same as we have here, 1128.42? And let's look at the leverage. So I'll click the top left there. Let's see the details. So for you to get your leverage, you click on your account where your profile is, then click on this exclamation mark. So you can see we have here USD. Oh, sorry, is this a live account? This is a demo account. I was scared. I was scared that I had placed that trade on my live account. So I'm looking at the wrong account. This is a live account. So let's check this. This is the demo account. So I'll click the 3 dots by the side. I was scared. Okay. So you can see now, the capital was started with 100,000 USD. What you see to the left here is your leverage, 1 to 100. Okay. So once you have 1 to 100 leverage, it means divide this initial required margin by 100, and that gives us what we have here. And that is why you can see on your MetaTrader here that the margin that we have here is 1128.42. Without that 1 to 100 leverage, we need $112,842 US to place this same trade. Now that is the power of leverage. Okay, leverage will allow you use $1128.42 to control or trade currencies worth of 112842 USD using a 1 to 100 leverage. Now this is the power of leverage. Now here's the trick: you cannot lose more than your capital. So the trick with leverage is that leverage is a two-edged sword. Okay, for a profitable trader it is an advantage, but for a losing trader it's a disadvantage, because if you make a profit it is yours, but if you make a loss, take for example you lose $500 now, you are trading this size, but if you lose $500 it will be subtracted from your 1128. Okay, So it means that if you're not careful with leverage, you can easily wipe out your account balance in one day. And so this is where the concept of risk management comes in, which we will do in another video. You have $1,000 capital, and you have, with leverage, you can control over $100,000. It doesn't mean you have to trade all 100,000 on one trade all at once. Okay, that is over trading, that is over leveraging. Okay, so that's the basic concept of leverage. Okay, let me give you another example. Leverage can range from 1 to 100 to as high as 1 to 1,000. Okay, so with a leverage of 1 to 1, it means the broker is not borrowing you any money. You need 112,842 USD to buy 100,000 euros. Okay, now if the broker gives you 1 to 100 leverage, you only need here 1128.42 USD. If you choose, now the broker gives you the option of 1 to 100 to 1 to 1,000. It is your choice to choose. So if you choose 1 to 100, this is what your margin will be for euro dollar, one standard lot 1.0. But if you choose 1 to 500 margin, this will be divided by 2. This will, your margin required will now be, let's see, 1128.42 divided by 2 will now be 564.21. No, sorry, divided by 5 times 2 divided by 5 will now be 225.684. Your margin requirement will be 225.684 USD. So you can see that as your leverage is increasing, your margin required is reducing. Okay, as your leverage is increasing, your margin required is reducing. So if we use the highest, most brokers have the highest of 1 to 1,000. It simply means that you only need 112.842 USD. This is why you can see traders with $100. This is why you can see traders with 1,000 USD. They can trade one standard lot confidently because of the power of this leverage. Okay, but without leverage, for you to trade one standard lot, you need 112,842 USD, which most people cannot afford. But because the broker has given you leverage, you can cut down this amount to either 112, you can cut it down to either 225, you can cut it down to 1128.42, depending on what leverage you choose. So the options are there when you're opening your account. Even after you open your account, you can change your leverage at any time to whatever leverage you want, so long as you do not have an open trade. Okay, so this is basically the power of leverage. Leverage is a two-edged sword. If you're a good trader, leverage will allow you use small capital to control large quantity of traded assets, and you keep the profit to yourself. But the disadvantage or the downside to it, if you're not a good trader, when you lose, okay, you lose, the loss is taken out of your own small deposit that you have with the broker. Okay, so that is the basic power of your margin and leverage. So now let's look at the calculation. This calculation we have here, margin is equal to notional value divided by leverage. Okay, so if you are using a leverage of 1 to 1,000, let's say you trade one lot of euro dollar. Instead of setting aside 100,000 euros as a good faith deposit, you would only set aside this amount. So you have to use this calculation, this formula here. Margin is equal to notional value divided by leverage. Okay, so let's calculate. So notional value is your units. Okay, notional value is your units. So let's see, what will it take us to buy 100 euros. Okay, what would it take us to buy 100 euros using 1 to 1000 leverage? Or I will use the example we have always been using before. Okay, next, let me use another page. So we want to buy 100,000 euros. This is equals to 1 standard lot. Okay, margin is equals to notional value. Notional, please excuse my, I'm writing very fast to save time. So that is notional value divided by leverage. Okay, so the margin required for you to buy 100,000, right, is equals to, so if you are using a leverage of 1 to 1, so notional value is what? Your euros, 100,000 units divided by 1. So you need to actually provide 100,000 euros to buy this amount with a 1-to-1 leverage. That means you are not borrowing any money from the broker. You didn't take any leverage. But if you are using a 1 to 1000 margin, if you are using a 1 to 100 leverage, okay, this is leverage. The formula will now be 100,000 divided by 1000. Now you know the way you do our math, so we now have 100. So all you need to set aside with a 1 to 1000 leverage is 100 euros. Okay, for you to get the dollar value, that would depend on the exchange rate at which you are making that trade. And so this is the basic idea of notional of margin and leverage, and how leverage can allow you to use 100 euros, okay, to buy 100,000 euros. Okay, but whatever profit you make will be added to your 100 euro. Whatever loss you make will be taken away from your 100 euros, and of course it will be taken away from your, let's look at the MetaTrader 4. Whatever profit you make will be added to your balance or equity. Okay, it will also be added to your free margin, but whatever loss you make will be subtracted from your free margin. Remember, 1128.42 has been set aside. You can't use it for anything else. You can only use the free margin to purchase more currency, but also when you make a profit, your profit will be added to the free margin. When you make a loss, your loss will be taken out of your free margin. So you can see that this loss of $494 has been taken out of the equity. That is why we now have 98389. Any further losses will be subtracted from this free margin here. Okay, and then when you close the trade, your free margin, your equity becomes your balance. Let's take that again. Whatever profit you make will be taken out of your equity. Okay, will be taken out of your equity. It also applies to the free margin. But after you close the trade, okay, your equity will now become equals to your balance, because you have taken the profit or you have taken your loss on that trade. Okay, so that is basically how you apply margin and leverage to your trading. It is a two-edged sword, and it should be treated with care. If you are a beginner, please just stick to a leverage or a margin of 1 to 100, and it will save you a lot of troubles. As you become more experienced, okay, you can increase that. But even at my level now, I'm still using 1 to 200 leverage. I don't need so much high leverage because I know the dangers. Okay, so why don't we just protect ourselves from it in the first place? Okay, so that's basically it for margin and leverage. I hope you learned something new in this video. Go back over and over again until you grab it. It's fundamental to your success as a trader. Okay, thank you so much for watching this video. If you like the video, give us a thumbs up. If you're just watching our videos for the first time, click the subscribe button below this video, and also click the bell beside the subscribe button. Click on all notifications so that you'll be notified whenever I upload a new video. All right, so have a wonderful day. I'll see you in the next video. Cheers.